Ladies and gentlemen, okay, we are here. Welcome back, everyone.
It's your turn this time around. I had mine last time.
Yeah, we fumbled the beginning. All right, we are back. TD Markets Academy. Huh?
I think we're looking okay.
Yeah, we're looking okay. You know, I decided to add this. You know,
Uh-huh.
we've got our gentleman, our special guest,
I didn't catch his name.
Mr. December. Let's call him Mr. December. We've got Mr. December there joining
Mr.
us.
December's joining.
I know it's a little bit early, but I thought I should add.
Nah, it's cool.
Just, to be in the mood.
Yeah.
Yeah, we're approaching that festive season, man.
Festive season.
Yeah.
This is our last episode for the year, yeah? Is that our second last one? Or year?
Second last one.
Second last one.
Yes.
We'll have the last one next week.
Next week. This is episode.
This is episode 7. Episode 7. So we end up with episode 8, guys.
End up with episode 8.
Uh-huh.
I go by the name of Tsepo.
Ashley Reeve.
Yes, sir.
Good to be with my brother as always.
Good to be back. To be back. You know, we've got a very nice, fun topic this time around.
Yeah,
depending on the angle we take.
Yeah, of course. And I think from when you say fun topic, it's not always discussed.
Exactly. There we go.
Because everybody's always excited about what happens before it. Obviously, you're going to intro it for us. I'm not going to spoil it for the fans.
Yeah.
But for yourself, it's not always spoken about. So I think it's going to put some fun in it. Yeah.
And since we're in December, I think it's a perfect timing.
Yeah. Today's the 5th.
Today's the
5th of December.
5th of December. We're recording this on the 5th of December.
Yes.
All right. It is hot outside.
Wafisa.
I see my man got the Botswana in there.
I got it somewhere there, it's there.
Yeah.
Okay. It's hot.
I think let's dive straight into it. If you guys missed the previous sessions, you can go ahead and watch. Just go back TD Markets on YouTube.
Yeah.
Check out the previous episode, season 3. This is episode 7.
So 7. And the just as a reminder, we discussed a couple of problems from the past 2 episodes. The one was setups versus strategies.
No, lack of confidence.
Confidence was the first one. I'm actually just tracking back. I'm tracking back. So the last one we had was setup versus strategy, and then the one before that was lacking confidence or how to build confidence.
Yeah, 100%. So this time, my man, we're discussing. Of course, it's December now. I mean, us as traders from January to November, December, we're busy trading.
Yeah.
And then there comes a time where now you're a little bit unsure of how the market will move.
Yeah.
That being in December.
Yeah.
So I want us to talk about trading in December.
In December, yeah.
Is it safe to trade in December? Have you experienced trading in December, and whether is it something we can focus on? Because January, or maybe let's say February to November, we focus on trading. The markets are open.
Yeah.
There might be a few holidays in between, bank holidays. But now when it comes to December, we know that pretty much a lot of institutions, banks are wrapping up the year. They will be closed. Not all of them. Some of them will be open, of course. But I've seen in the past that myself personally, I don't focus much on trading in December. And that is because I haven't really found success trading in December, actually.
Okay.
So what I do is I do a few routines that will help me prepare for maybe January or February.
Okay.
So I want us to talk about that, trading in December. I know there's a lot of guys out there that are trading, beginner traders. We talk about them a lot that I'm not sure if they should be trading in December. What should they do?
Yeah.
Should they risk less because there might not be movements? Is the market volatile, erratic? I want us to break that down.
Okay. All right, cool. I mean, that's like T said, it's definitely a fun one.
Yeah.
Because I think it depends on a number of things. What are you trading firstly? All right. Because
that's very important.
Exactly. What are you trading?
Yeah.
You mentioned bank holidays. So obviously that then influences currencies. But then what about companies? Because I actually found something interesting when it comes to these retail trading. So retail trading versus retail trading. And so that is just quickly, just a minute or so, just to quickly break that down, right?
Yeah.
So retail trading versus retail trading. In December, retail trading is booming. Now, we are retail traders.
Sure.
Retail trading is booming. But the kind of retail trading is what I want to define.
Okay.
So distinguishing between this retail and that retail is the following.
Yeah.
The retail trading that booms is all our outlets in malls. There's gifts. There's that gets bought.
Yeah.
People go out and eat at restaurants.
Yeah.
And so forth. So if there is a company that's listed as an example, or a group that's listed, they have a number of companies under the group, like your famous brands as an example, Tiger Brands as an example. So all these things, all these companies, they obviously have momentum.
Sure.
Because they are getting revenue, but it's not necessarily shown in the actual company stock at that moment in time. Because it takes a couple of months, weeks for that revenue to be reported.
Sure.
So they can see that there was movement in the previous 2 or 3 months.
Yeah.
And so then in February 2024, you'll see the report of December.
Nice. Yeah.
So
makes sense.
So hence I said or asked, what are we trading? Then the other side of the tennis court, which is this retail trading, is us now. The guys, like we have mentioned, we are buying and selling the performance and the value of currency, stocks, etc. So here there's less liquidity because it's just like you said, there's holidays.
Yeah.
People aren't actively engaging because they are on holiday as well. So there's holidays, people are on holiday. And so the buying and exchanging slows down, and the consolidation period there becomes from a market phase perspective, we can generally see a lot of consolidation zones.
Yeah.
So retail being outlets, spending, gifts versus the retail trader. That's how I actually view it.
I see. Yeah, I see the angle you're taking.
You're
taking it. So of course, during this time, the outlets, I think that's where they tend to perform the most because it's that season now. People want to feel good, so they go out and buy, spend their bonuses and so forth.
Exactly.
Yeah.
It's the truth.
Yeah, people spend their bonuses.
They spend the bonuses.
Yeah.
Guys, we're looking at you. Watch your bonus because January is coming. You must deposit some funds.
Of course.
So don't spend everything. Watch out.
I've got a book called The Richest Man in Babylon. I don't know if you know it. They said that the most important rule is to pay yourself first and then spend the rest. But now paying yourself first is now funding your account.
For next year. 224. Absolutely.
Yeah. So this time, of course, my man, that's where now we get that good feeling or feel good.
Yeah.
Where now we are buying, spending, and all of that.
Yeah.
But now when it comes to now, as you said, buying the performance of these currencies and whatnot, there we tend to see less volume.
Absolutely.
So less volume, which then translates to less volatility in the market, so forth and so on. Right. How I would do it is during this time, I wrap up, the trading year. Now, what do I do during that time? After the 16th, 17th, after that week, that's when now what I've seen is the markets tends to be a little bit slow. There are movements, people are still trading, but with how I trade, the market tends to be a little bit slow. So now what do I do in this period, in this phase? I do what I call a yearly recap.
Got you.
Yearly recap.
Break that down for us. Yeah.
100%.
Yeah.
So what I do, and I use TradingView for this because that is the most efficient program you can use. So what you do is you look at how your favorite currency pairs or the one you focused on, how they performed during the year. So from January up until
November,
right?
Let's say November, yeah.
And then you study the setups that formed during the year that you've missed.
Yes.
Right. Like, for example, GBP, JPY. I remember I did this last year, December, where I tracked GBP, JPY for the whole year. And I saw that there were setups that I missed. Looking at them in hindsight, of course, some of them I didn't even see, but I would see, but this one, I could have traded the setup, At that time, GBP, JPY was just bullish. It's still bullish now. It was just extremely bullish. So then I would check those setups, take screenshot. I'm a big advocate when it comes to screenshots.
Hey, I concur. I concur with that.
My man.
I keep them all.
Sure.
Even, well, just to say something there. I don't take off my analysis. I leave it on to refer back.
Exactly. That is very important.
Yeah.
So then you can see how the market moved. The market respected your setup forth. Right.
There we go. Yeah. So, sorry about that, bro. Yeah.
No problem. So I would take GBP, JPY, then redo the analysis. So I use TradingView and I use the replay button on TradingView. Right? Then I played, do the analysis as if I'm trading again.
Exactly.
But it's like back testing, so to say.
Yeah.
Right. Look at the setups, take screenshot, paste it, and really learn. That's how you improve as a trader.
Exactly.
Really learn from how the market has moved, because the market evolves.
Yes.
Like a lot of time.
Yeah.
So that's what I call yearly recap.
Got you.
Take all these screenshots, then I put them nicely in a PowerPoint presentation, and I go through them every now and then.
Exactly.
Into the next year, I would still go through them.
Exactly.
And see how the market has performed.
Because the market doesn't change that much.
Yeah.
Yes, there's slight variations, which is normal. If you look at the world of fashion as an example, right?
Yeah.
Fashion and what it brings out on a seasonal basis.
Yeah.
There is a consistency. There is floral as an example. Women are going to wear this big dresses, these orange lime green dresses at some point in the year.
Yeah, sure.
But the colors that they mesh together might be different from 2 years ago, but it's still the same floral dress.
Still the same floral
dress. And so it's exactly the same with the market. Yes, there's variations, but I love how you saying you're recapping it. And guys, this is so valuable because it connects with the last one we had, which was the setup and the strategy, where we had said take screenshots of your setups that you do specifically. Then you connect with the TradingView tool as an example. The screenshots that you took versus what you see on TradingView, and you see there's any correlation, if there's any connection between them.
Sure.
You know, so it's actually a fantastic tool to use, guys. I don't know, you guys can maybe comment and let us know what kind of activities do you do when it comes to December.
December. So that's effectively what I've done, what I do. You know, that yearly recap just to close off the year. And then by doing that, you are also automatically preparing for the next year.
Yes.
I don't know, something happens, but trust me, you're preparing for the next year, and then you are a little bit ready. Might not be 100%, but you're ready for next year.
Question, right? Yeah. And the guys out there might even be, are you tempted? Are you tempted at all? Because remember, we can admit to the guys here, this thing is an obsession.
Yeah.
When we switch on our laptops, it is impossible for us just to go onto Google and do research and read history or read poetry or we have to at least have the charts running on the side.
Yep.
Just so
in
the background to look at the majors, how are they moving? So it's an obsession.
Yeah.
Whether we question whether the obsession is good or bad, that's immaterial. It is something we cannot switch off, right? Is that obsession consistent in December for you now? I'll give you mine, but I'm curious to know.
I mean, the temptation is there, but I try not to, not to do anything. I try not to. Right?
So has it happened that?
Yeah. Sure.
Okay. So it has. Okay.
And I think also with how we tend to be busy in December, I don't like holding positions and then I know I'm gonna be busy. I won't be able
2-3 days you're busy.
I'm not comfortable with that. I'd rather maybe manage them or stop them, close them, and then I'll check when I'm not busy. So December, you tend to be a little bit busy there, spend your time with your family. Of course, the laptop is there. You want to open up that laptop, my man. You've got your MT4 on your phone. What are you feeling? Buying with the family, you tend to take out your phone and just check what USD Swiss is doing.
You know what's so crazy about that? You mentioning MT4.
Yeah.
The one which you see, just example, CHF JPY.
Yeah.
We see this nice breakout. Immediately it's time you go to your laptop because you're like, hey, I can't analyze it properly on my phone. I'm standing with the people, but I see there's a nice drop here. Let me quickly go into the room or something and quickly this thing here.
Hey,
go ahead, brother. Yeah.
Put this thing very far away from you. You know this thing called a phone, it was your MT4.
Yeah.
Those temptations are there, but hey, man, I haven't had, success trading in December.
Okay.
So I tend to not to trade.
Okay.
If it happens that I open up a position, let it be one position, maybe risking 0.5%.
Yeah.
That's it. If I happen to lose that position, it's only 0.5% of the account.
Yeah.
That's it.
Just a question on volumes there, brother. We understand leverage, we understand margin, how it works according to your account balance and so forth, risk management. But maybe just for the viewers, what is the majority of the time, what kind of volumes do you normally trade with? The reason why I actually asked this is because
it's a very good question.
When I started out, I was told not to ask too many questions. And this was now almost a decade ago, right?
Yeah.
So my first year, the guy that gave me some mentorship and so forth, he said use 0.01, 0.02, and 0.03 only. Now I come and I ask, okay, so why can't I use 0.04 or 0.05? Because obviously it's digited numbers, all right, decimal numbers. So can you maybe tell me? He's like, no, you asked too many questions. Just use 0.01, 0.02, and 0.03. Only later on, obviously, when I really got into the thick of trading, started with different brokerages, teaching people and so forth. Obviously, now you get into the meat of it. Now you understand the back workings of volume, how it relates to leverage, exactly what we do as, at the academy. And I was very unhappy with this mentor saying to me, I asked too many questions. I should just use what he says. And years later now, I'm finding myself feeling comfortable with only using certain volumes for now.
Okay.
Which would example be, I do a test trade of 0.01 always. I'll always open up a 0.01 test trade because it's like putting my toe in the water.
Yeah.
Just to feel the temperature, especially December, when you go to the pools, you don't just jump in.
Test first.
Just quick test as Pinky. Just test the Pinky.
Hey, there are some people that will just put their legs and just say, I'm swimming.
So I tested just for the flavor to see, is my lower low okay? Did it break it properly? Am I seeing the formation of that consolidation zone coming now at the lower low? And I monitored with that test trade. Now, let's say if price does push up, I already know I'm at a lower low. So that will be a retest to the upside. And so at that retest, I know I can.
Okay, you go in.
Exactly.
I see.
But then if it drops below that specific lower low, now I know I can do some sell stops now.
I get you.
Because now you see, so it's a test trade that's 0.01. Now when it goes to the upside, it's at the high. So now I can say 0.05, 0.10, 0.15. Because when that sucker comes down, now you're really running.
Then you're in.
In, right? So I mentioned 4, the 0.01, 0.05, 0.10, 0.15. That would be nice moderate risks. Because if you really want to cash it in, if it goes to the upside and you say one standard lot, that one standard lot coming to the bottom, especially on a gold, on a NASDAQ,
you in deep blues.
That time. Okay, guys. You're in deep blues.
You know how they say
you're in deep blues, right? Yeah. And so what kind of volumes do you normally fluctuate between?
So mine is heavily dependent on the risk I take per trade. Usually I would take 1 or 2% risk. That's why I play, because of my risk management, my strategy, how I view the market.
Yes.
Right? I'm not normally aggressive with my risk. So now my lot sizes tend to be a little bit different because of the risk. And remember, when it comes to the risk, your stop losses are not the same all the time.
It's not exactly.
Right? There we go. Your stop loss pips.
Yeah.
So it might happen that you're looking at a Euro USD trade, and that on that particular setup, your stop loss is maybe 30 pips as an example, right?
Yes.
And then you see maybe NZD USD, your stop loss there according to that setup is 60 pips, right? You can still trade the same 1%, but your stop losses can be different. So with mine, I always stick to 1%. Different lot sizes depending on the stop losses, not gonna be the same, right? And now when I'm going to what you heard a decade ago, that guy said, or your mentor then said, you must stick to 0.1, 0.02, whatever the case is. I think from a consistency point of view, and I always tell beginner traders to, focus on consistency. That's number one. Consistency in your risk, consistent in this and that. When it comes to your risk and lot sizes, try to manage maybe a 1% risk per trade and try to find consistency in that and this particular lot size. For an example, if you want to trade 0.01 as a beginner, try to find consistent in trading 0.01. The moment you can see there's consistent profits, then you can scale up.
You scale up.
That's the strategy that I would tell the guys to use.
From a risk management perspective.
Yeah.
Yes.
Also from risk management, it's important that as a beginner, you find consistency in trading 1%, risking 1% per trade. Before you go crazy and go to 5%, find consistency trading that, because chances are what you did trading a 1% risk per trade is exactly what you're going to do when you risk 10%.
Yes.
Nothing's going to change.
Nothing's going to change.
Yeah. So if you can make profits risking 1% consistently, trust me, you're going to make profits risking 10%.
Yes.
Yeah.
And guys, just to add to what T is actually mentioning there, make sure that your setup, whether it's December, whether it's Feb, whether it's November, it really doesn't. Make sure your setup merges with your risk management well.
100%.
Because 100%. You can do risk management anywhere. At this point, we can go to the market and we can say, let's put a new order in of one standard lot. Our profit is 2,000 Rand as an example. Our stop loss, we're going to go maybe 500 Rand, right? Sure. So yes, it's a good risk and reward there, but it's in the middle of nowhere. And you don't know why you actually took the sell or you took the buy. So your setup must merge with your risk management and say that if I enter at this lower low, there's normally a place where I would put my stop loss because my take profit is further away as my setup shows me. So the setup must show you that risk and reward ratio very nicely before you actually take that specific trade.
I think those things, they should be one. You know, there's no debate about it, because when you create a trading plan, on a trading plan, there's a risk there. You know how you're going to
exactly.
And you know the type of setups you're going to take that's according to this risk.
Yes.
So I think without any debate or discussion, they should be one.
It should be one.
That's it.
So beginners, from what I've gathered, certain beginners, and this is what I love to do, T.
Sure.
When I do a one-on-one with someone, right?
Yeah.
I will ask them, please share your screen. And then take me through your setup. If it's someone that I know has been with us and they're now intermediary and advanced, and if that's the case, they should know a little bit more. They shouldn't be as nervous as what they used to be when they were starting out. So I will always say to them, please will you share your screen? Let's see what you do. Please take NZD CAD, analyze for me. I go very quiet. I say nothing and I allow them to actually analyze. And what I pick up, many guys, they become very nervous, firstly. Secondly, what someone says and what someone does is two different things. When you speak to them and you ask them questions, they can answer you. And you ask them, what are the 3 phases in the market, as an example, or what are the key levels? It's highs, higher highs, and so forth, right? So when you ask them those specific questions, they can answer you like, oh, wow, you are listening. Great. But then you say, share your screen.
Apply.
Yeah. Then it's a different story.
Yeah.
They lose their words. They start drawing stuff in places where you're like, I don't even know what pattern that is. The last time I had this thing, you know, it had hands, you know, so I'm like, what did it had hands. But the point is that you're hitting the nail on the head when you say it should be one. In the words of someone, it's one, but in the application, it's separate. So the skill of putting them together requires so much time.
I was about to say it requires time.
It requires time
because you need to constantly work on it, improve it, develop it.
Exactly. So now this December, going back to your initial topic, my brother. Our setups, because we know there's less liquidity now from this side of the tennis court, the retail trading with the performance and the value. There's less volumes. It's thinner. You know, we're not going to reach our TPs really.
We can, but you know, chances are very slim.
That's exactly. The probability is lower. That's the point that I'm trying to make, right? Sure. Probability is lower. Here's a question on that. Do you think the setups should be shifted then in that specific time?
Shifted how?
Where you wouldn't normally draw a trend line, but now you do, as an example. So maybe someone doesn't use trend lines at all, okay? And I think there are guys out there that they don't use any trend lines. They can just see it with their naked eye. They don't need to draw it. So they don't use it. But then in December, because there's less volumes, they want to be surer that it is breaking the trend line. So now they adjust the setup in December. They use the trend line for more accuracy.
I think from the point of view, accuracy, we can use that. But the moment we force it, that's where the problem starts.
Okay. Can we define that force thing? Okay.
As an example, let's say you know the type of setups that you normally trade, right? It doesn't matter whether it's December or January. But now come December, you're looking at this particular setup And the moment you're unsure, that's where the problem starts now. Because when you're unsure, that's when now you're going to start drawing things that you haven't used now. You know, you draw harmonic patterns now.
Butterflies and ships.
Butterflies, you know, the crabs. So now, from a point of assurity, I think that's fine, because now you understand your setup, you understand how flexible your setups can be to a point where you can still utilize trend lines.
Yeah.
But if it happens that you do not trade trend lines, and then December you use a trend line, that must be now forcing it now. We are forcing the setup now.
What kind of, and you think it's maybe you looking in places you shouldn't be looking, because the whole year you weren't looking at this guy's YouTube channel.
No.
All of a sudden you see this thing pop up, trading in December. Now, and you click on trading in December, and it's totally different from what you've been used to.
Yep.
And now you're beginning to force.
Got you. And that's when now discipline is out the window now. You see, discipline, because I believe, you know, my man, I think having a strategy and understanding the setups you take, I think that's a, so to say, like a blessing to a trader, because now you know exactly what you're looking for on the charts.
Yeah.
And you know that requires discipline to follow the rules and the plans and so forth and so on. The moment you just take it off ramp, and then try to do something else, that's when now your account is going to be a mess. It might be a mess.
Yeah.
So I think, you know, from a point of consistency, we can still look at these things, but if you cannot see what EuroUSD is trying to do, and usually you would just discard it and look at maybe something else. But the moment you then force your trend lines to look at this, then just know that you're losing it.
You're losing it, right?
You're losing it.
I want to swing back to what you had mentioned earlier on about sometimes you get tempted.
Yeah.
The way I see it, right? Because I mentioned I actually wanted to give you my personal thing as well. So I see it as a business, right? If I close my doors, I close my doors. And if I get one customer that comes and says, "Hey man, I have 50,000 Rand that I want to buy worth in terms of product."
Sure.
Now, a crazy person is going to say no, because I mean, 50,000 Rands worth of to close off your year with that on your books. But now this one customer comes in and you open up the store. Now, guys are going to debate and say, yeah, there's different ways. You can take him through the back.
Okay.
You can switch off the lights and not let everyone see. Because the moment you open the door, you're opening yourself up to other customers as well. That's the logic behind it. If someone walks past your store and you're dealing with a $50,000 pound Rand customer, those guys are going to come in and maybe they only want to spend 50 Rand. But because you open the door, you have no choice but to serve that guy as well. So if the trade, so I'm swinging back to now trading.
Yeah.
The probability that this trade is going to go in your favor in December, and it's a trade you can see, this thing, I'm going to make money here.
Then go for it.
You say you want to
go for it.
You say you want to go for it.
I mean, you can see, but this is an opportunity. You can see, and you can see the probabilities are high.
Okay,
it's gonna go into that. Then go for it.
What times would you look at? Because now we know globally, Christmas is celebrated, right?
Yeah.
So from about the 21st, you really start seeing people in the Christmas spirit, that feeling, that mood with their hat. I know we're coming in like early this time. Guys, Merry Christmas, guys.
Mr. December. Yeah.
So from the 21st, then you really start feeling that now it's like holidays now, right? The trades, would you go into a trade from between the 21st and the 27th?
I try not to.
Okay.
I try not to.
Did you hear that, guys?
Yeah, I try not to, because
there we go.
And I think mentally I've prepared myself to say I'm not gonna trade.
Okay.
Even if I see that gold is presenting something, if I take a trade on gold, I know that I won't be able to monitor it as much as I want to, because now there's peace, you're back home with your family. So I try not to, but mentally I switch off. Come after your 16th, 17th, I switch off. Mentally,
So you see, that's where I actually get that from, that $50,000 client, right? So from the 21st to the 28th, that guy, I'll tell him, come on the 29th.
Okay.
Just rather come on the 29th. I promise you, I'm gonna make sure I'm open.
But now you're running the risk of that guy seeing something else and then buying.
But now look at this. Now the market, because that is a pressure point.
Yeah.
That pressure point can put you in a position to force something.
Yep.
that can work against you. But because it's the market, you and I both know, and you guys that are tuning in, you know that 29th, come 29, 30, come January 3rd, 4th, 5th, there's new opportunities.
Of course.
So I'm using that as an example to say, even if the opportunity seems so favorable, that word that you use now, brother, discipline, sometimes it's within your interest to let that guy just go for now.
Yeah, okay.
You see,
I get you.
From that angle, I'm not saying don't do business. I'm not saying don't take a trade if the probabilities are. I get the logic behind it.
Yeah.
But sometimes for your own mind, just like you said, I'm busy, family's there, and I need to attend. Mommy's sending me here. Daddy's doing this, so I have to be with the family.
100%.
Sometimes just let the guy go and say, hey, man, come back 29. I promise you I'll give you best service, but I'm away at this moment in time.
Yeah, I mean, discipline is very key. And if it happens that the guy doesn't come back, then it's okay, my man. As I said, January, there's still opportunity.
There's still, exactly.
There might be an $80,000 client stepping in your store.
Yeah. From a December perspective, right? Because we're going to go into Jan. Maybe just a few key points, maybe that we can, give the guys from your mind just to take note of.
I think risk management is very important in December.
Risk management.
Whatever you do, I mean, this is what we preach and tell the guys, even if you're trading throughout the year, risk according to your appetite or risk tolerance or whatever it is. But December, make sure that that risk system that you have is very strict. Those rules are very strict, my man, because anything can happen. The market can move slow. The market can be quick. You never really will understand how the market will move. So I think when you take trades, stick to your proper risk. Maybe risk 1% if you used to risk 1%, or maybe 0.5. And see how December is.
0.05 or 0.5?
No, 0.5%.
Oh, sorry. Yes, sorry. Gotcha. I was not volumes.
I mean, there's another December coming. So if you get a hang of how December looks in the market, you'll then understand the next December how the market is likely going to move. Risk management, very important, extremely important.
So if I can just go back to all the things that you've now mentioned, bro, just to quickly get a mental focus here for the guys as well. One was risk management in December. Make sure that you understand it because things are thin. There's not a lot of volume. Liquidity is not there like it is in the rest of the year. And that's okay, right? 2, it was do a yearly recap. Go from Jan, November, look how the pairs that you trade have moved, the setups and so forth. Those are 2 critical things. Can I add something to that?
Sure, go for it.
Also on TradingView, actually. But for the guys that should be trading with us and that is trading with us, and those that should be trading with us and is trading with us, remember, we also give the dollar index as a specific instrument for you to actually trade, right? I like to look at currency indexes as individuals, and TradingView provides that as well as a tool where you can look at the performance of the pound by itself, the dollar by itself, the yen by itself, so you can see what it's done as prep for the next year.
I see.
I think I've always had that mindset to say December is like a preparation month for me.
Exactly. That's what it is, man.
It's a preparation month, so we might not take trades, but it's more preparation. 21st to 28, it's just relaxing, because after 28 it's like I'm in 2024.
It's done.
New Year's doesn't even need to come 31st December. I'm already in 2000. Right now I'm already mentally in 2024. Right now, you know me, Tiba.
Right now,
bro, I'm already in 2024.
We've got the seminar coming up.
I know. I'm already, you guys.
Hey, that's fun. And it's just the 5th of December. It's just after December.
I'm already in Jan, my man. 5th of Jan.
Sure, yeah.
But the point is, so for me being in 2024, it's preparation for me.
I get you.
What am I putting in place? It's gonna make me better, because my January this year, I make notes. Where was I mentally in January 2023? So I reflect back on that, because guys just think, I mean, you know this, T, they just think about setups. Is the market going to retrace so I can take? No, let's think about our mind as well.
Yeah, it's more than that.
The psychology. Where were you in January 2023? Was it better than 2022? So just like the investors give us year-on-year reports, month-on-month, quarter-on-quarter, I do psychological reporting as well.
Nice.
Year-on-year. Where was I Jan 2023? And where do I want to be 2024 January? That's why I'm saying I'm already there. Sure. And I'm making notes already to say and reflecting back, what do I want to change?
Yeah.
All right. And make different to what I did this year.
Yo, you know, being able to tap back, being able to tap back and really see, there's power in that, you know.
Yeah.
And you know, some people might not be able to do that, but I guess it's something that you can develop.
You can develop
and work on.
Agreed.
Right. Sometimes I do struggle with tapping back. In fact, I don't like to tap back
too much
history. Yeah.
Why? Maybe tell the guys why do you?
No, I mean, you know, I like to focus on the present and the future. The moment I go back, my mind goes back. It tends to be difficult to come back here to be present.
Got you.
You know, it's something that I've been struggling with for the longest of time.
Yeah.
But being able to do that and see, okay, now it will be in hindsight, you know, seeing how everything played out is very important, because now you can really not learn, but you can really dive deep into some of the things and how you would have navigated some of the things, and also preparing for what's to come. Like you said, 2024 now, maybe you've gone back, you're gonna go back. You'll be able to at least how can I put it? You'll be able to navigate around the possibilities of what's to come.
Yes.
You know, for the next 3 months, next 4 months.
Exactly.
There we
because
go.
That's what investors do. That's what CEOs do. They think about it. They don't get to December 31st and they're like, what are we doing? They already reflecting already from 6-month period. So they already from July. From June, July this year, they were already thinking about 2024, 6 months. So that's how far back they have to go and look at their vision and plan. And so that's one of the reasons why I actually do that, is because remember, for me personally, and I'm glad that you and I, we share so much here, so the other guys, they can benefit. I have a wife. I have 2 kids. I have to think that way because I have to lead them as well. I mean, I can't get and say, wifey, you know, okay, so please give us the plan.
No, you cannot do that.
No,
you can't. As a man.
No. We don't know how you guys feel about that. We are not saying that women can't lead. Please don't get us wrong. Please don't.
Know, a man is known to lead.
A man is known to lead. And we understand it will differ from opinion to opinion. We understand it. We're speaking from our experience. Is that we believe as men here that there's an element of leadership that must come to the forefront. And so we want to try and put that into a nice systematic way, 100%. So that when I go to my wife, she can have confidence in me.
Exactly.
That's the reason for it. So she say, oh, but my love is, you know, he's thinking about us. He's thinking about the future, about us as a married couple. All of those things, it's all in thought. Am I going to spoil my wife differently to what I did this year? It may seem silly to some people, but women love that.
Of course, they love that. And, you know, I think they find security in that. You know, they're more comfortable to say, you know, I know that we don't know what's going to happen tomorrow, but I can trust and believe my husband, you know, has everything figured out. Or maybe
80% figured out.
80%.
And there's a 20% that we maybe need to talk about and so forth, right? But swinging now that example back to training, because I know the viewers, you know, they'll wonder how are we getting to marriage now, and we you know, so swinging it, don't worry guys, we know where we're going, right? So swinging it back to trading, it's exactly the same. We're planning. We're looking, we are looking at, the dollar was it was pretty weak in the past few couple of weeks. It's at the 102 point area, but there's still some upside with the dollar. And TradingView also shows us a lot of history where there was higher highs for the dollar. So now we're saying, if it was so low this year, ending off at 103 points or 105, where would it possibly be next year, the first quarter? So it's that vision, it's that planning,
and it's very key. That vision is key.
Exactly.
Yeah, you know, we always have to plan ahead or plan and see the possibilities. Very important. Yeah.
So it's risk management. It's just like you said, it's the recap.
Doing a yearly recap.
Recap. Guys, that was actually powerful what T mentioned. The replaying it. You can use TradingView, as you mentioned.
I mean, also for, sorry to get in there. There are a few MT4 simulators
that you can also
that you can also use to replay the data on the MT4.
What we can maybe do is maybe chat to the guys and maybe make those kind of things available in the academy maybe next year or so.
That's something very that
in the future we can do for the guys.
100%.
Because guys, remember, for myself and T, we are obsessed with you becoming independent in your trading.
100%.
And so we work every day for that kind of thing. Yeah.
100%.
So risk management, looking at your yearly recap, looking at specific assets or the performance of currencies throughout the year, and then making notes to say, listen, this is where this one was. This is what I see in the next, couple of months in Jan. If it breaks that high, if it breaks that high, this is possibly where it could go to.
And also by doing that, you can already, just what you're saying right now, you can already see how they can react in the first quarter. So now you can focus on those for the first quarter.
Got you. So guys,
what do you do? What do you do in December?
December for me, like I said, from 21 to 28.
Yeah, it's done. Shop is closed.
Shop is closed I will be tempted just like you. I'll look because it's an obsession.
I mean,
so we have to
look.
Our
life.
It's our life. It's not. It's not a job for us. And guys, please understand this. This is not a job for me and T. This is part of our fiber. This is what we do every day. It's full time. It's not part time, right?
Full-time,
It's full time. So if you have to ask us a specific question, we should be able to say
100%.
That's why it's part of our lives, 100%. Right? So 21, 28. I relax.
Sure.
I give attention to the things I need to, but I'm tempted. I do look. What is the performance? Because come 29, I'm already on the charts looking at things.
Sure.
And I'm trying to speculate again now going into December. So when everyone's doing New Year's and they all happy, no, I'm happy.
Yeah.
I'm doing the whole Happy New Year thing.
But just a little bit different.
A little bit different, more conservative, more controlled in a sense. I'm very thoughtful in that specific moment so that when I come back to work, when I say work, I just mean for the sake of it. But when I come to this part of my life, it's full force.
Nice.
And can I just give you just one disadvantage though, that I actually saw with that? Because I'm planning and I'm in 2024, sometimes I lock heads with people around me, like, so they will say, amen, but relax, it's December. And so for me, it's like, but you don't really understand why. And so then
I understand you.
So it's one disadvantage, but I guess it's perception. If that person really sees what I'm trying to achieve, I think they won't see it as a problem. So I think I understand why they would say, hey man, relax. It's December. So I think it goes both ways. So that's the only hardship that I've actually had with that.
I've never had that.
That's the only hardship I've had where people say, relax, man, it's December. Enjoy your time. You don't have to be so serious about it.
I mean, it's also important, in a way to just take a break.
Exactly.
Out of this.
That's why I said 21, 28. But in December, the rest of the days, the rest of the days,
you're on your phone. You're scrolling, you're zooming in.
That's 7 days, just 1 week. The other 3, please leave me. I'm focused. I want to do my thing. 100%.
Sure. I get you. See, with myself, doesn't matter whether it's December. I can't go 2 days without opening a chart. During the weekends, I open the charts. I can't.
Sunday evenings, 9 o'clock. 9
o'clock. The charts.
Sunday evening, 9 o'clock. You all
have a market open. I can't. So December also is the case, but I try not to actively trade, but just to monitor. I was expecting gold to do something like this. Let me see where it is right now. Okay, interesting. I'll check it out.
But you won't necessarily take a position on
that. I try not. I try not.
Switch off sometimes. So. But guys, hey man, T, I don't know. I think we had a fantastic time.
We were talking about like I said, a fun topic. Trading in December, right? Should we trade in December? Should we monitor the charts? Should we work on our strategies? Develop it further? There's a lot of things we can do in December. But actively trading, that's something I don't really look into.
And I mean, guys, remember, please comment. Let us know what you guys do.
Sure,
we would love to see it because remember, markets are shaped by it's perspective. It's views. So markets are shaped by that. But we hope you guys really enjoyed it. We'll be in Cape Town.
On the 8th, is it the 8th?
8th of December. That's this week. It's Friday. It's the last NFP for 2023. Very excited about it, actually, to see seminar in the morning. That's at 9:30 a.m. We're going to be taking it through to about 12, I believe.
I think from 9 to 12.
About 9 to 12. And then we'll be doing the live NFP there with the guys in Cape Town. I believe we're going to be at Sea Point, my brother.
Sea Point. You know, we'll be treating the NFP. When you look out the windows, the sea.
Aha.
You know, that's where we'll be. Sea Point.
So Cape Townians, please get yourselves ready. Come and visit us. Let's shake a hand, you know. Let's speak to you guys.
You know,
yeah.
Let's talk. Let's be in conversations.
Exactly.
Yeah. And then NFP, we just, like we've been doing, just kill it.
Let's just kill it.
I think we found a proper strategy that we understand
for all the guests, for everybody.
Oh yeah, 100%.
And it's sensible.
Yeah,
it's easy to follow.
It's
on the shorter time frames. It's money now.
Yeah,
it might come. It is money now.
Yeah,
it might materialize maybe 2 hours later, but it's money for today.
Sure. Yeah, for today.
It's for today. It's for that day. So that's fantastic. So guys, please just join us there, 8th of December, 9 to 12 at our Sea Point office, Cape Town, myself and T, and then the NFP later on in the day.
Yeah, and don't forget to subscribe, share, and do everything that they do. You know, turn on the notification bell.
Yeah, that ting is a ting or ring or whatever.
There's gonna be an animation somewhere.
It was on top or the left somewhere.
Somewhere here, it's gonna be animation.
And then, guys, remember we have our last episode due next week. With myself and T, we will be preparing a few things for you guys that they can help you guys go into and transition into 2024. And then please have a fantastic one with your family. Mr. December's ready.
Mr. December's ready, you know, full of energy. Yeah.
All right. So, anything else on your side, brother, before we?
Nah, I think from my side is be safe.
Be safe, guys.
Yeah.
All right.
Cheers, everyone.
Cheers.
Check you guys.
Ciao.